Just like, for instance, U.S. Steel, I talked about, I think I briefly mentioned in the securities analysis and trading webinar. I'm shocked that it's been holding this high level because that high price is based upon the acquisition, the proposed acquisition by Nippon Steel, the Japanese steel company, which there's no way in hell that's going to be approved. It's a national security threat. And in fact, Trump even mentioned he's going to repeal that. So it's just mind-boggling to me why U.S. Steel has held on to like $45. I think recently it kind of sold off a little bit. This is one I would like to see it crater. Let's see what it's doing actually. I don't follow it closely. I just, it's been holding this mid to high 40s for quite a long time. Which there's just no way I see this deal going through. Anybody know Big Lots? They sell, everything from furniture to groceries to just whatever. You go there and a lot of times you don't really know what to expect. It's similar to Tuesday Morning, which, we talked about that one. Those stores are eventually going to go by the wayside. Of course, Tuesday Morning, as I expected, filed for bankruptcy. So it was only a matter of time. There's going to be more bankruptcies. Big Lots ultimately is not going to make it. Okay, I don't believe it's ultimately going to make it. Now, whether or not that means over the next 1 to 2 years or 3 years versus 10 years, I can't tell you. It depends upon a lot of things. So you can see here over the past 2 years, the stock's gone from nearly $70. Let's call it $70, all the way down to under $10. It's pretty extreme, right? So what's the deal? I haven't looked into it. I haven't had a chance to look into it, but I wanted to point this out to give you guys a chance to look into it. Okay. So you can see the one thing that stands out, of course, is this huge dividend yield, almost 14%. Well, look, this dividend is going to go away. It should be obvious. And I did run across, I took a look at this article, and apparently an analyst from Piper Sandler. Take a look. We're downgrading. This is why the stock recently sold off. It's another downgrade to underweight, lowering the price target to $7 from $12. And so this based upon reduced demand for home furnishings and mattresses. Incidentally, I think that they lost their vendor for furniture, so this is kind of weird because they're not selling any furniture anyway, or not much anyway. So anyway, the bottom line is you can see here, the price target was reduced and the downgrade. Why? Because of the declining business is going to continue to weaken sales, free cash flow, and puts the dividend at risk. And I'm thinking like, what? What's the dividend? You fucking idiot. You're a knucklehead. The dividend's going away. If the dividend doesn't get cut completely, it's not eliminated, this company is basically in deep trouble. I can tell you that right now. I mean, I'm just thinking like this report should be more like the company needs to eliminate the dividend. This company is facing the possibility of bankruptcy. That's what I see after looking at this company for 20 minutes. Just very brief things. Okay. It's obviously going to take a lot more of a dive to look at things. But just from looking at this for a few minutes, to me, we're talking about a potential liquidity issue. We look at the inventory. They had a low net debt situation before. Now they've got a lot of debt and increasing inventory, high interest rates, high inflation, weakening economy. So they need cash. What they need to do is shut down the stores. Now, one of the things I looked into that consumed most of that 20 minutes was looking into some articles to see if they had been closing stores. Apparently, a couple of years ago, I think in 2020, they planned to open 500 new stores over the next 10 years. This year, they had all these land plots. They've already closed. They didn't close enough. They've got way too many stores. They need to close stores rapidly. Okay. They need to go through reassessment and close stores rapidly. A lot of stores. They got too many. I think it's similar to Bed Bath and Beyond in terms of the aggressiveness that they need to take, and I don't see them doing it, which is why it's possible this thing could fall quickly, which would be atypical. It's not typical that you see a company fall so rapidly. This stock could easily 50% downside, easily 50% downside from here. This stock could easily 50% downside, easily 50% downside from here. This stock could easily 50% downside, easily 50% downside from here. I just say though, they've got to change course drastically, or they don't have. They've got a high chance of a liquidity problem, and then ultimately a solvency issue. But fundamentally, this is in trouble. It's in deep trouble. You know, I haven't looked at options. You know, buying puts might be something. So, you know, that's the thing that's bizarre to me is that, you know, this analyst, this is the recent sell-off. This analyst lowers the price target to $7, and he's talking about they may have to reduce the dividend. What? I mean, he should be talking about this company it needs to get their act together, or they may go bankrupt. You need cash. You're paying a dividend? No. You aggressively shut down stores, eliminate the dividend, and then you work from there. That hasn't happened yet. So already, I don't like what I see from the management.
In terms of getting back as an investor, if it's coming down to here, almost irrespective of what's going on, I have to believe, if I have to make a call in advance, and of course I can change depending upon what happens, but I have to believe this is where you want to start doing that 18, 17, around there. Their earnings report is a complete game changer, at least for quite a while. Bottom line, NVIDIA now is going to enter the realm of Tesla, Apple, and all these other big, I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works. I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works.